Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies SOFI stock news updates, such as how the company is helping their customers combat inflation, which is a huge deal. Then we're going to move on to talk about why analysts are actually slashing and decreasing their overall price targets. So we're going to be going over the latest price targets and price predictions among professionals. Then we're going to move on to discuss why Sofi Technologies has amazing potential upside left in their stock price and great growth potential overall for a business that is rapidly developing. And then lastly, we are going to compare Sofi Technologies versus Robinhood Markets HOOD stock to determine which fintech company or fintech business and stock is a better buying opportunity considering the current market environment. So for more videos on Sofi Technologies and the SOFI stock price, remember to go and smash that like button right now. Comment your thoughts down below about SOFI stock or Robinhood's HOOD stock. Without further ado, let's just jump right into today's stories. So if you didn't know, Sofi Technologies is a fintech company or a financial technology company that offers an all-in-one inclusive app that offers anything that someone would need in terms of financial products and or financial services. If you didn't know, the SOFI stock is on a downward trajectory, and it has been for the last couple of months, which has made many of their shareholders very nervous about holding the SOFI stock price for the long term. However, SOFI is still a very good company fundamentally, and we will talk about that later in this video. The stock has declined by around 31% just in the last month and around 10% just in the last week. The current stock price for the SOFI stock trades at around $6.42 per share, mainly because of the student loan moratorium being extended, as well as the updated revenue guidance, because this clearly has affected their overall revenues and earnings projections, which we have talked about a lot in previous videos, so I'm not going to go into detail on either of those subjects in this particular video, but I do want to highlight how Sofi Technologies is actually helping their members fight inflation, which is absolutely fantastic news. SoFi truly is a one-stop shop for someone's financial needs. For instance, earlier in the month, they announced that SoFi is offering a yield of 1.25% annually on the money that their customers hold in their checking accounts, and this is literally 41 times higher than the overall national average. So clearly Sofi Technologies has the competitive advantage here. They also instituted another program where customers get 3% cash back on their credit cards, and they are attracting new members due to these programs, which is going to increase their overall revenues due to their very highly competitive rates and cross-selling business model. Another really good thing is that as interest rates increase, Sofi Technologies still has extremely competitive rates compared to other legacy banks and other lenders. This is another wonderful competitive advantage that Sofi Technology has, and again, I want to make sure that you all are aware that Sofi is set to report their Q1 earnings report on May 10th, and of course I'm going to do an analysis video on that. But all of this is relatively old news, so now that you are fully caught up, if you didn't watch any of the other videos, I want to talk about why SoFi stock is falling right now and why analysts are slashing their overall stock price targets. First, I want to talk about the analysts. Around 9 specialists have given Sofi Technologies a buy rating, while 0 analysts that were polled said that the stock was overweight. However, 3 analysts have changed their minds about Sofi Technologies stock, changing their original buy rating to a hold rating because of the current stock market environment, while none of these analysts actually say to sell the overall stock. So why are they slashing price targets, and who is slashing their price targets? Well, for instance, let's start off with Oppenheimer, which is a very prestigious institution, and their analysts have actually lowered the SOFI stock price for Sofi Technologies, and they have lowered their price target from a price target of around $18 to $13, which is actually a huge blunder. We also see other institutions such as Bank of America lowering their price target for the SOFI stock from $14 down to $12, and lastly, for Sofi Technologies SOFI stock, the analysts from Wedbush have downgraded it from $20 down to $15 per share. So if you weren't aware of that, this is something definitely to be aware of. However, we even have newer analysts coming out that are also slashing their overall price targets for the company. And this has just added to the negative downward momentum that we have seen in the overall SOFI stock. the stock price has crashed by around 70% over the last 6 months, according to this article. However, the company is still experiencing very solid member growth as well as product growth, which is good news. So the only reason why the stock price is falling is due to projections and the current stock market environment, not because Sofi Technologies is a bad company, and I can't emphasize that enough. Now, with that being said, this does not mean that you can go overexpose yourself and buy as many SoFi shares as you possibly can handle, because that would be bad risk management. To me, it's much better to buy a handful of very good, high-performing companies instead of betting all of your money just on one singular company, and that is just proper risk management. We also see other analysts that even said, and I quote, "SoFi's guide down due to President Biden's student loan moratorium extension isn't surprising, and is priced into the stock." So this analyst is already saying that the current stock price has already priced in the student loan moratorium extension, and the fact that the stock price is continuously falling after that means that the company is oversold, which means that too many investors have actually sold the company, and now investors are getting a very good value from this particular growth company, which is fantastic. So despite many analysts lowering their price target from $17 down to around $14 per share, the current stock price, which is trading at around $6, is a fantastic buying opportunity based on their fundamentals and their overall financials. This is why the majority of analysts still are very bullish and positive in regards to SoFi's business and the overall SOFI stock price. So overall, this is very positive news. So despite the guidance cut due to the student loan moratorium extension, SoFi stock is literally still set to grow at a fantastic overall rate, which is why I am wondering when investors are actually going to catch on to this. So it begs the question, what price could the SOFI stock price reach in the next month? Well, SoFi literally could reach, according to analysts, around $14.35 on average, and depending on what analyst you look at, you're going to get average price targets and median consensus price estimates anywhere between $14 and $15 per share. And the current Wall Street consensus says that SoFi stock is a good buying opportunity because they rate stocks on a scale from 1 to 5, 1 being the best, meaning that the company is a strong buying opportunity to buy their shares, and 5 means to sell the stock, it's a strong sell. Currently, Wall Street says that SoFi stock is rated as a 1.9, and if a 2 indicates a buy, lower than a 2 indicates a strong buy recommendation from Wall Street analysts. So this is overall very good to see. But we shouldn't just take our news and our analysis based off of analysts, because analysts are used as a guide. It's not actually what the stock price is going to achieve, and we should only use their price targets as a general range of what SoFi stock could potentially achieve under certain market conditions. So now let's actually look at a technical analysis indicator that measures momentum in most cases, and it's going to tell us whether or not the company is overbought or oversold. For instance, if the company is oversold, that means the company is a good buying opportunity because it's trading below what the stock price should actually be worth, and people are just selling the company for no reason because they don't want to lose money. However, on the other hand, if the company is overbought, that increases the risk of this company falling dramatically. So let's actually see what the relative strength index, also known as the RSI indicator, has to say about this. To measure the RSI, or the relative strength index, anything above a 70 RSI would indicate overbought, which would be negative, and anything below a RSI of 30 would indicate a positive oversold rating, which means that it could be a good buying opportunity. And if we look at the SOFI stock, or the SoFi stock price, over the last 2 weeks, we can see that they have a rating of around 28.9 for their RSI, which would indicate that this company is a good buying opportunity based off of technical analysis. We also get a better look at this when we look at other analysts' ratings. So out of these 12 industry professionals, we see 7 buy ratings for this group of analysts and 5 hold ratings, and again, no sell ratings, which is something really to look forward to. It means that Wall Street is pretty bullish on this overall company, and this should in turn give investors confidence in their original investment as long as they are not overexposed. Again, I cannot stress it enough. Overexposing yourself to a single company is not investing, it is gambling. Be smart, and I think it's best to own a basket of high-performing growth companies as long as you have a strong foundation of blue chip stocks as well as ETFs. Now, with that being said, analysts currently think that the SOFI stock price or SOFI stock could literally jump by 132%, a 132% upside potential from what the current stock price is right now, which is again around $6.39. So overall, this is very bullish right now, with the high-end price target being $22, the average price consensus being around $15 to $14, and right here it's $14.86, while the low-end price prediction among professionals over the next 12 months is $10, which is still above the stock's current price, which is another reason why I personally have bought the company, because I think it's way oversold right now and it's only artificially being held down by short interest and the current market environment. However, time will tell, and always make sure to do your own research. Make sure this company aligns with your personal investing style and goals, and don't take on too much risk. But now I want to compare SoFi Technologies to a very comparable competitor such as Robinhood Markets, ticker symbol HOOD, also known as Hood Stock. And you all are probably aware of what Robinhood Markets does. They operate an online brokerage platform or a stock trading platform that probably many of you use. However, ever since the company went live on the public stock market, the stock price has absolutely plummeted. But now we're going to compare SoFi Technologies to Robinhood stock because they both operate brokerage platforms. SoFi Technologies operates in part as an online broker. However, they are also part bank and part technology company. So which is the better buy between these very undervalued fintech companies right now, because both of their overall stock prices have fallen dramatically? Robinhood literally popularized free trading, which changed the entire online brokerage industry and trading platforms across the board. The company started trading at around 35 cents per share, and now it's dropped down to around $10 per share. Robinhood was extremely disruptive and revolutionized their respected space. However, their larger competitors ended up following suit by offering free trading, which eliminated Robinhood's competitive advantage, thus also eliminating their membership growth, which in turn impacted their revenue extremely negatively. Robinhood's overall users peaked at around 21.3 million active users in the second quarter of 2021, and since then it has fallen to right now it averages around 17.3 million active users. The revenue per customer also fell dramatically from $137 in Q1 or quarter 1 of 2021 down to around $64 by quarter 4 of 2021, which is why we see this very aggressive sell-off from the HOOD stock. Now, the company could activate a reversal at any time and the HOOD stock could start to appreciate. However, I wouldn't count on that happening anytime soon. Their revenues have declined pretty dramatically due to their overall membership loss, and while Robinhood targets new, young, and unexperienced investors, this has actually worked against them in a big way, because in a bear market or when the market is not performing well, these newer investors really don't know how the markets work, and it affects them, and they end up not investing or stop investing altogether, and they leave Robinhood's platform. More experienced investors know that there are cycles of bull markets and bear markets, and although SoFi Technologies also targets new young high earners for their brokerage platform and their other services, SoFi Technologies is much more diversified in my personal opinion. SoFi Technologies also operates an online brokerage, but they also do many other things such as lending, refinancing student loans, as well as banking as a service to other businesses. So they have two customer bases, customers such as you and I, as well as other businesses. And currently SoFi Technologies price to sales ratio, which we talked about in previous videos, has fallen to around 4, which is absolutely insane, especially for a hyper growth stock such as SoFi Technologies. The price to sales ratio, which compares the stock's current price to their overall revenues or sales, was as high as 18 last year, and it has dropped down to 4. In my opinion, anything below 10 for a PS ratio for an aggressive growth company is already fantastic. So right now, SoFi is in very deep value territory in my personal opinion compared to other growth companies. As you can see, we had an initial surge in the overall SOFI stock price, and again, SOFI, I'm saying letter S, letter O, letter F, letter I, SOFI, and then the SoFi stock has literally consolidated before falling due to the overall macroeconomic environment. Yet despite despite this, the company itself is still very strong. While the stock price is trending downward, its revenues and other financial metrics have been trending upwards. For instance, in quarter 4, their revenue jumped by around 67% year over year, which is astonishing. However, the company does have large net losses of around $111 million due to their higher expenses. The company also carries debt, and the company is not profitable yet, so you are investing into this company for the future growth and appreciation of their overall financial metrics, which I personally think is feasible for SoFi. Due to SoFi's bank charter, their acquisition of Galileo and Technisys, the company is adding millions of accounts and customers, which is insane to see. This is why I personally think Sofi Technologies is a much better investment than Robinhood stock right now, or the HOOD stock, because Sofi Technologies literally is Robinhood and more. They both offer brokerage platforms, so SoFi offers everything that Robinhood offers, basically. However, SoFi has multiple other revenue segments overall. However, I would love to hear your thoughts down below about SoFi Technologies and Robinhood markets. Remember to go and smash that like button if you haven't already, subscribe if you are new, and I will see you in the next YT video.